Good morning, everyone, and welcome to Monday Morning. It's Stephen Whiteside here from theuptrend.com. In the pre-market this morning, stock index futures are down again across the board. They are certainly off their lows. Last night, Sunday night's trading, the Dow was down 1,500 points for a while. And so we've come back off those lows, but we're still being led lower by the Russell 2000. So that is the risk-off trade, of course. So we've got the VIX trading higher once again on Monday morning. Now, there are economic reports coming out every day of the week. I only focus on the major ones, and we don't have anything on Monday or Tuesday to disturb the market. On Wednesday, we'll get the minutes from the last Fed meeting. The market can always react to that. And then we've got some very important numbers on Thursday, and then on Friday, we've got PPI. So that's what's ahead of us for the week, but nothing on Monday or Tuesday. Now, the VIX continues to spike, and the VIX for the S&P 500, the NASDAQ, the Russell 2000, they're all continuing to move higher. If you're trading the VIX, please continue to sell into strength here. The VIX does not often hold its gains for very long. That doesn't mean it will completely change direction quickly, but it'll often give up a lot of the gains. And we'll see the VIX come back sharply, but probably not enough to give us a sell signal at this time. So please continue to sell into strength if you are long the VIX. Now, looking at the major index ETFs, I just want to point out everything looks pretty similar right now. The TSX finally caught up with the U.S. markets on Thursday and Friday with the big sell-off in crude oil. That really pulled the Canadian market down. So we saw panic selling on Friday. We've broken through the 200-day moving average. We're trading below the flypaper channel. So what was previously support should act as resistance on the way back up. If we follow along here, we're trading back at levels that we haven't seen since last September. So that has been all wiped out. We do have more aggressive panic selling in the U.S. market and broken down way below the panic zones here. The 200-day moving average, they were trying to hold it, and it acted as resistance, and now we're breaking away from it. And we've certainly broken away from the flypaper channel. So to get to the flypaper channel, we're going to have to get through all this congestion here, and that's going to take a while. And we also have some open gaps to fill on the way back. And if you follow along here, you'll see that we're trading below the levels from August of 2024. So really giving up a lot of gains over the past 6 months or so. Now, looking at the world markets, they all collapsed on Friday as well. There's Australia. They actually collapsed on Thursday, and then we saw the follow through on Friday. So there is the European market, there's China, there's Japan, just as some examples, and the Japanese market getting crushed last week. And so, yeah, it's a global thing now. It started off being just a US thing. Now it's a global thing. Somebody was asking me about the ARK Innovation ETFs. They're all looking pretty similar. They're all oversold at the moment, and they all have the same characteristics. So here we are, top of the panic zones, early warning signal goes off. The chart starts to change color. That's when we want to be sellers. That's when we want to short. Now, what happened is we became oversold. We got down to the bottom of the panic zones, the pressure zones formed. That's exactly when you look for buying opportunities, but the buying opportunity did not last very long. So it was not enough to generate a new early warning signal because there really wasn't much of a bounce. And now you can see the pressure zone being elongated across the bottom here. And that also tells us that this particular symbol is broken and it's not cycling the way it should cycle. Stocks cycle up, they cycle down, and this cycle is broken. And that is true for the majority of stocks at the moment. And it is certainly true for all of the ARK ETFs. They're all looking very, very similar. No early warning signals went off, and the pressure zones elongated across the bottom. So they're all looking pretty similar. A lot of tech stocks, a lot of stocks in the market look like that at the moment. Now, crude oil got crushed last week. Early warning signal went off, but a very fast moving market, really hard to stay afloat here. We had a big down day on Thursday, fall through to the downside on Friday. The stocks, on the other hand, gapped lower in reaction to the move in crude oil. So there's Canadian energy stocks just getting crushed on Thursday and Friday. There's what it looks like on the right side chart. U.S. energy stocks also getting crushed, also gapping lower on Thursday and Friday, taking out all the previous lows that you can see on the chart. So very, very broken sector of the market. It wasn't that way 3 days ago. It is now, unfortunately, and that is not good for the Canadian market. Moving on to the TSX most actives, and most of these stocks are energy stocks, and they all got crushed on Thursday and Friday. There's Canadian Natural Resources. There's the TD Bank, fourth day of a sell signal there. A wild couple of days for TC Energy, generating buy signal on Wednesday, and then it came down hard with the rest of the energy sector on Thursday and Friday. Manulife put in a new high on Wednesday, rolled over on Thursday, and got crushed on Friday. There's Baytex, second day of a sell signal there. Similar situation for Whitecap. Then we've got Bank of Nova Scotia making a new low on Friday. Big down move on Thursday and Friday for Cenovus. Then we've got Suncor making a new low on Friday, breaking down below the March lows. These are all very ugly charts. Shopify, we had lots of warning for Shopify, so congratulations if you're short Shopify at the moment. And then the first gold stock to show up on the most active list was Kinross, and it is back on a sell signal as of Friday's close. Moving on to the U.S. most actives, and it's a pretty ugly picture here. I was watching very closely to see if Nvidia would hold $100. It did not. It got down to 93.75 on Friday. The low was 92.11. In overnight trading, it's been down to 87.50. Currently trading around $90 last time I checked this morning, but it is certainly headed down to 87.50 in after hours trading. Looking at Intel, a big down day on Friday, trying to hold the March lows. No joy for Ford, still on a sell signal here. Recovered quite a bit off the intraday low on Friday, actually closing slightly higher on the day. There's Lucid, still on a buy signal, sitting right on the lower channel line. No joy for Tesla, back on a sell signal as of Friday's close. There is Bank of America having a terrible week last week, gapping lower on Thursday and Friday. Then we've got Apple. If we look at the price target chart from a week ago, we were looking for support to hold at the 210 level. It had held Apple at that level for a week or so in the month of March. And then unfortunately, we gapped below that area of support, which is a bad sign, and continued lower on Friday as well, down to the 87.50 level, getting as low as 87.34 on Friday. Then looking at Amazon, a new low on Friday. There's a new low for Palantir on Friday as well. American Airlines actually reversed course on Friday, didn't close higher on the day, ended the day just down 5 cents. So, the fact that so many people are canceling trips to the U.S. is a bad thing for the airlines, but then to see crude oil prices come down actually can help their bottom line. So there might be some hope for the airlines going forward if crude oil prices continue to move lower. Then we've got Nike reversing on Friday. They may get some help on the tariff front with Vietnam. Then we've got Pfizer, big down day on Friday for Pfizer, making a new low for this move. And then the first gold stock to show up on the U.S. most active list was B2 Gold, and it's been on a sell signal for a week now, so no change in trend for B2 Gold. And let's finish off this morning's presentation with just a little reminder about investor etiquette. I know a lot of you are long the bear ETFs at the moment. Anyone who's ever had a one-on-one tutorial with me, I've gone through the how to use the leveraged ETFs, and especially the bear ETFs when the market's falling. So whether you're long the 2X or long the 3X, they're all doing very well at the moment. There's the 3X for the S&P 500, up nearly 18% on Friday. For the NASDAQ, they're up nearly 18.5% on Friday alone. This is great for your portfolio, but I suggest you keep it to yourself for the time being. Lots of your friends and family members are having their portfolios getting crushed at the moment, and you really don't want to wave that type of information in their face. Later on, you can tell them all about it and explain it to them and show it how it works, but it's a bit too late for them to jump into those bear ETFs on Monday morning. Enjoy the rest of your day. Next time you'll hear my voice is on Tuesday morning, and we'll see what happened on Monday and talk about it on Tuesday.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theyuptrend.com.